Welcome back, ladies and gentlemen, and all our attendees. It's time for our final session for the evening before we dive into the awards as well. But with that, let's actually commence with our final session around a very pertinent theme wherein we focus on winds of change, the evolving business models of payment companies and future-proofing technologies. Now, to spearhead this discussion, to set the tone and to also extract insights from fellow panelists, we have with us our session moderator, Mr. Zubin Tafti, Director, Payments Transformation, PwC India. He's a dynamic business consultant with more than 10 years of experience in advising global clients to set up or transform their businesses with a view to growing market share, reduce cost, redesign target operating model, automate, or for that matter, go digital. So while he's armed with all that experience, he'll also be here to share his insights and to gather insights from fellow panelists that include Mr. Malek Mroueh, who's the Vice President and Regional Head, Asia, Middle East, and Africa, TSYS, a global payments company, and he's an international payments executive with over 29 years of experience in the payment cards industry, and having worked with all the major associations in both local and global collaborations, he has specialized in bringing together a passion for innovation in payments and strong technology skill set. So we also have with us Mr. Malek joining us, and we have Mr. Saurabh Dalmia, EVP and Head of Cash Management of Bank of Baroda, who comes with more than 25 years of transaction banking leadership experience at public sector and global banks in India and North America. We're also joined by Mr. Lohit Gupta, Head Partnerships Grofers, who comes with over a decade of experience in strategic partnerships and monetization. And he's someone who's always on the lookout for new innovations in driving cost-effective growth and customer delight. Our next panelist is Mr. Rajesh, Londhe, co-founder and head payments PayPhi. In fact, he's an experienced leader with an extensive experience in banking and payment space for various card products such as EFT switch, debit card management system, payment gateway, credit card, and prepaid card management system. Our next speaker with us is Sunit Vakharia, Head Consumer Banking Technology India, DBS Bank Limited. He's a senior strategic executive with solid understanding of the financial ecosystem, deeply analytical and data-driven person with strong understanding of technologies. And that leaves me with our final speaker. We have with us Ms. Neha Gupta, Product and Business Head, Issuance, Stored Value Account, Gift Cards with Amazon Pay. And she's someone who comes with a prolific experience of more than 15 years across functions that have been backed by a strong academic background. She's experienced in financial planning, corporate strategy, product management, business development, and sales and distribution. So with that, it's time to gather all the amazing insights from some of our fabulous set of speakers, in fact, are joining us. They say it's the last session, but it'll always be latest with all the kind of insights we'll be gathering. So with that, let's deep dive into this session and let's get it started within the next couple of seconds. Let's bring our speakers on board just for you.
Hey, hi, very good afternoon to everyone, my fellow panelists and all your listeners. I know this session is between the awards and the last session here. I don't want to keep you all, waiting for the awards, but I believe it's a very relevant topic in a topic more recently that has become, come under scrutiny in the market in terms of, the business model and the commercial financial model. And I hope as part of this, we'll be able to have a meaningful conversation. I initially thought I'll, spend some time where each one can talk a little bit about themselves, but I think Kavya has done a really good job in laying that background down for each of us. So I think we straightway jump into the questions and then see how that goes and as we go forward. So to start with, just to lay the context down. The business model in payments has been evolving. Payments has been a dynamic space. It never seems to stay constant, always evolving, new models, new solutions, new players, disruptions happening all over the place, whether it's simple currency, whether it's rails, whether it's products, whether it's customer experience. And we've seen that happen, across the ecosystem. So without any ado, I'll go into the first question. And that's broadly to kind of say that, what have been these forces, or what have been these driving forces that have been driving change, especially in the business or the economic model for payment industry. And I mean the industry as a whole. And for this, maybe I'll first call in, Malek, to bring in some global perspective, given his role in TSYS. And then maybe we can have Sunit and Neha to talk about it from a banking and a fintech perspective also. Sorry, Malek, you're on mute.
That's the classic problem, eh? So I was just saying thank you, everybody, for having me on the panel. It's a pleasure to be here. I think the challenges coming in India are almost replicated everywhere around the world. And they come down to basically three pillars. And the pillars basically are regulation, where we're seeing much more regulators holding the banks and financial organizations to a much, much higher level of accountability year on year, especially after the 2008 crash. So that level of oversight is driving complexity in supporting regulation. It's also being fed by open banking regulation. So you see that in Europe with the PSD system, and we're going to see that more and more places around the world. And the fact that the central banks are opening up to new entrants and issuing e-money licenses and what have you, collectively form that one pillar of regulatory drive. On top of that, you've got a rapidly advancing technology driver where, it comes from history. A lot of the traditional banks are running quite monolithic structures that don't really scale easily. They're a fixed box of a fixed size to take a fixed capacity. And on top of that, the ecosystems tend to be fragmented in especially the key digital areas. So for example, in my world of payment cards, debit, credit, prepaid could be three different systems in a bank just because of historical reasons. So trying to initiate change across a payment product becomes very difficult because you're initiating it 3 times in 3 different platforms, and all of the complexities that entails. And on top of all that, you've got this constant cybersecurity threat as we go into what I think will become a dominant conversation point, open banking, API banking. So you've also got every bank trying to be a complete security warehouse, trying to block all of this stuff coming in. So collectively, that kind of sums up the technology driver. And then the most important driver, which I've left to last, is the customer driver. And they're the biggest driver of the lot because that's our future. And, their demands have just shot through the roof. So especially when you look at the new Gen Z, Gen Z are just demanding speed and convenience in every aspect of their life. And financial services is not getting away with it. It's part of the past. And payments are having to evolve to meet the demand of their requirement, which was exasperated by the whole COVID situation that we had. So the rise of on-demand services, whether it be for ordering food or services for entertainment or mobility or whatever it is, that need to pay is coming out. And they expect to pay, be able to pay at any time with any channel through a multitude of tools, whether it be their watch or their phone or some bracelet, or they're going jogging and they want to have it on a ring or whatever it is. They want to be able to do it and all in real time. And that's all while not sacrificing a single ounce of security or a seamless experience. And that's just touching on it. Now, the expectation that everything to do with fraud, risk management, exception management, all of that is just assumed to be in place because of the trust the existing banking environment has. Now, that trust is the key. That's the bit that makes financial services, have the upper edge over, let's say, supermarkets trying to run these things, or telcos for that matter. And that trust is, easily lost. It's hard won, but it's easily lost. So we've got to deliver all those speed and convenience, all while keeping that. And it doesn't stop there, and that's the problem. So on top of that, as if that wasn't enough of a headache for us, they're also expecting us to compound the challenge by saying, well, it needs to be more than just transacting and making the transaction flow safely and quickly. Actually, I would like to be able to look at my, Bank X account through my, Ferragamo styled wallet or Chanel styled app or whatever it is that they want to do. And they expect that the bank will make that available. And they want to be able to link services together. They want to be able to go to their Pizza Hut or Amazon Payments and save the card on there and expect it to go and get the account whenever they want, and in fact maybe even see the balance on it. And so this kind of thing causes a lot of challenges for us to serve, but it also opens up a whole manner of opportunities. And those opportunities that open up go into things like cross-selling, opening up services with co-branded partners, going into much wider reach to the customer. But to do that introduces another customer service pillar, which is the user interface. Now, how you build your user interface as a financial services player is going to become more and more important, because you are then managing the client's data for them, for their benefits, rather than securing it as we've always done, and that's all we ever do with it.
Yeah.
So these are all coming in as a multitude of pillars that are extremely tough. They're building huge moats in technology land between the players. But the path out of it almost inevitably is going to be API banking. API banking, open banking, whatever you want to call it, where it's the only way we can see the services being delivered to the market efficiently and effectively. But to do that, we have to go into the back end and also deliver the ability to scale, to have elastic size technology that can grow or contract depending on what's happening on the ground, and do it transparently and seamlessly to the and then just to make it even tougher, technology alone doesn't solve it. I mean, you can have the best skills in the world in terms of something that's scalable and architecture and all that, but if you don't have the know-how to put it together and build the tools to make it work and process 1 million transactions a second and all of these things, then it also falls through the heat. So you need that kind of, the API technology route is almost inevitable. How do we get there? We need the technology to be elastic. We need the know-how. We need all of that to be in place. And I think those all together come into one pot to drive that change. I'm sorry, it was a very big question. I couldn't do it in a quick answer.
No, thanks, Malek. So I think from the changing, forces or drivers, I think 3 big areas that you mentioned. One is, of course, regulatory, the technology, and of course, the never-ending expectations from customers. And always they want more. What you give them, then they keep wanting more. And I totally get that. And I think globally, yes, this is applicable across the globe and also to India to an extent. Some of these are a little more or less in India. And I think let's get that view in, what have these forces changed the Indian payment ecosystem, and where do we see that helping going change? Sunit, I'll bring you in here, and then maybe Neha, you can add in on that.
Sure. Thanks, Zubin. Thanks, Malek. I think you covered quite a few points I would have wanted to say, but they're very, very universal and static. But let me still add a couple of more points. So see, fundamentally, payments is one of the fastest moving space across the world. And it has been at the forefront of innovation everywhere. And I personally believe India is leading that space ahead of most of the countries, and I feel very, very proud to say that, because the amount of innovation we've seen, you take it the entire UPI ecosystem, you take the entire IMPS ecosystem, the way it has been developed, and we see now that's getting replicated in many countries that we see through, right? So I definitely believe that this space will keep on evolving, and at the end, any evaluation, any innovation is driven by the need by the users and customers. So it is something happening as industry is moving towards. To give you an example, right? The same thing wouldn't have been possible 20 years ago when there was no solid internet, there was no solid infrastructure. So the innovation happening across the products, across the streams is driving this change. I'll just name 2 or 3 which are not covered by Malek. I think regulatory piece is very, very standard and very, very common, where in India, NPCI is really at the forefront of making sure the payment systems really innovate very, very fast, right? So other 2 things I'm just keeping touch upon is, one is the cultural change, right? Now look at the example of the pandemic, how it has caused everyone to work from their own homes. They can't go out, they really cannot travel for a distance, but they still want to make their work to happen. And that is where the classic case, the cultural or the behavioral changes really, really catapult the payment ecosystem to move to the next level, right? Which then you see the entire digital ecosystem evolving, the entire demonetization phase, how it changed in country, the way the entire payment ecosystem evolved and moved upon. So the entire way the culture, all the things change around you are one of the biggest driver which makes change to what you do. And second large piece is the way I touched upon the entire ecosystem change. Look at the cloud adoption happening across the world and in India as well. And the moment you get on cloud, the making a change, the speed of change is so fast, you're able to give the customer literally a new feature almost every second day. And that's something really drives how quickly you can innovate and give a newer and a better product. So in a summary, the whole cultural shift, the regulatory change, and the entire ecosystem evolution is making the entire payment ecosystem to move at a real rapid speed. And those are, to me, are very, very critical drivers of change. So we're on mute.
Okay, sorry. Yeah, Neha, anything to add on top of what Sunit said in terms of forces of change? While I know you all did mention regulatory, but no one brought up, the squeeze on margins being driven.
Yeah, so I would possibly touch upon that. In fact, actually, I was waiting for that point. So I think, so of course, I think Malek, Sunit touched upon all of the points. I think I have some of the nuanced perspective around that is, of course, the government getting involved in terms of kind of making the vision of cashless India happen, and therefore the interventions around MDR and kind of really the continuous downward pressure that we are seeing, including UPI at zero MDR. I think like that has been one of the biggest forces in the last few years, I think, which is kind of really making the payment industry and the economic model change very substantially. So I think that's one nuance specifically in the India context that I wanted to kind of call out. And I think we'll possibly talk about it as we go forward. I think open banking or democratization of access is definitely great. But I think with this, a lot of standardization is also happening. And standardization, I think, and I'm of course, referring to the India context in terms of how the entire UPI framework is so standard, and now it is getting replicated to PPIs and the wallets in that sense. So what I also feel is that it also kind of really puts immense amount of pressure on innovation, because standardization and innovation really always do not go hand in hand, and therefore very rapid changes in business model and figuring out the customer opportunity and how to target, who to target, and how do you then use regulations, technology, customers, and the behavior or the cultural change that I think Sunit and Malek talked about is very, very important in that context. So I think the 2 additional points, Zubin, that I want to make is really the government involvement to make cashless happen, and therefore like the margins and the pressures, of course, is a very significant forcing function. And apart from that, I think the standardization also becomes a very significant forcing function to push the business/economic model.
Oh, thanks, Neha, for that. I think those were important points, and I totally agree in terms of, I think the government has in India a very proactive role in moving to cashless. I've seen that I mean, I do work around various geographies, and I think India pretty much takes a very strong stance, has made, strong moves to help that. I mean, there are both positives and negatives to it, and one could argue either way. But yes, I think that's the stance India's taken. And thanks for those inputs.
Zubin, if I can make your point about the margins, there is no doubt that tight margins already in place are going to be squeezed tighter. Absolutely no doubt. And this is, again, going to force us to rethink how we do things today. If I remember the last time I tried to go through a process of applying for a card in the banks 10 years ago versus applying more recently, the shift in the paperwork and signatures and everything else that had to be done, and this is in India, is ridiculous. And that same transition is going to happen throughout everything, because it'll be the only way to keep the margin costs down, because we will no longer be able to rely on low cost of labor for everything. So automation, AI, leveraging a lot of that big data to help us make decisions quicker and faster are all going to be absolutely fundamental to getting these margins to keep us alive.
Yeah, Malek. I think in India a little different, that there are certain payment instruments and rails where the government push MDR to zero. So it's not thin, it's zero. But anyways, we'll I think unpack that when we come to the India context a little more. And for that, I mean, my next question is to say that I think we heard a lot of inputs from Malek, Sunita, and Neha around what is changing, what are those forces that are bringing about change. I think my next question is to ask is what does this mean for the payment ecosystem, and how is it impacting them? And for that, I want to kind of get views from a different lens of different stakeholders. So maybe Lohit, I'll bring you in because you're from Grofers. I mean, you're kind of a merchant, from the merchant side of views, a person who kind of uses payments to enable your business model. How do you view this, view these changes, or view these kind of forces helping things make easier, more difficult for you? And then maybe I'll bring in also Rajesh from a fintech or an payment gateway provider, and then maybe from a bank, Saurabh, you can add in.
Thank you, Zubin.
Yeah.
I'll try and do justice to this. I'm in the company of some awesome people from the payments ecosystem. I'll try and simplify the merchant side of things, right? And to be fair, a lot has changed over the last few years. When we started out with the business, the first priority was, how do you decrease COD and increase your prepaid share, right? And gradually add more payment acceptance options on the platform. Then you try and solve the CFO's problem. You talked about margins. I agree, it's a good time to be a merchant because of the insane amount of competition in the industry. We have definitely benefited from that, right? But I see it as a phase of consolidation, and eventually margins should settle at where they deserve to be, right? And if you look at the CTO's lens, my CTO 4 years back would tell me, try and ensure that minimal engineering resources are used and you're able to optimize that, right? Now, all that has changed in the current context. Regulation. Yes, that has affected us too. But we figured out that somewhere we had to keep pace with the regulation. I'll give you a small example. When the change around safeguards was announced, we were one of the first merchants in India to partner with the payments orchestration provider and a network to move to card-on-file tokenization. So by another week or so, our customers will be able to start to experience the same, and we'll be ready by December 31st. So we do agree that some amount of regulation is necessary, and we've all been there as a merchant also with cybersecurity issues and other concerns from customers, which we are bound to solve either ways. So it's always good to be on the right side of regulation, and we are trying to keep pace with that. The other thing, the payments industry as a whole has evolved so much that as a merchant, we always have to keep pace with that, right? And there's a constant competition amongst merchants too. Are you offering the best payments experience to your customers? Especially for our context, we are an express delivery platform today. We deliver your orders in 10 minutes. Now with that lens of speed, everything needs to be quick. Customers need their checkout experience to be seamless, and they also need their refunds to be quick. So everything around our payments infra had to be adapted accordingly. So I think it's an exciting time around for merchants as well. but they'll have to run much faster than they've been running around payments system.
So thanks, Lohit, for that. I mean, interesting that I know it's a good time to be merchants. It's a lot cheaper now to enable payment acceptance than it was maybe a couple of years ago. And I totally understand in terms of, I think a lot has been done on the experience side, and a lot of players are playing niche, roles in enabling all these things to kind of make that payment experience a lot more seamless, at times even invisible or in the background. But anyways, moving on to Rajesh from PayPhi. What are your views in these kind of forces and how that has impacted your business, or how has it changed over time, given these forces that we spoke about?
Yeah, thank you, Zubin. I'm in this industry for the last 21 years. I've seen digital in 1999, and today we are on 2021, the digital here today, right? So we have seen it going from the cases where I personally used to actually take the balances of the people in the floppy, and I used to load it into the ATM. And from where today we are, right? So what I would say that the change is the only constant thing which keeps happening in our life. And the change has to be always taken as a positive. And the recent changes, which is happening in the payment industry, has impacted almost everybody in the ecosystem, be it fintechs, be it networks or schemes, or in the banking sector as well. Now, if you see 2020 data, India has done 48 billion transactions digitally, despite the COVID-19 pandemic in place. And it has really, even though it has affected an economy, digital payments are set to grow continuously and are getting adopted on a larger scale in 2021. And we are seeing it by 2022, it will again become bigger. This growth has been actually fueled by new players like big tech companies coming to India, non-banking players like fintech, like PayPhi, and also banking, the banks doing something new, innovative, along with the fintechs and players. Because the reason for this particular entrance is basically because we actually, as an ecosystem, are seeing the 3.6 trillion opportunity globally in the digital space. Now, the entry of this new fintechs and the big techs actually has pushed existing fintech players and the ecosystem to basically think about it. The first and foremost thing which comes into picture is an innovation in the technology. It's not only about business, but even as an India, as a country, we are actually started thinking differently when you are using technology in the innovation. That is the first change, which is very important factor when it comes to innovations in the payments. That is one. Second thing which has happened is now everybody has started thinking about initiatives to address the consumer experience, right? Previously, people used to only talk about the solutions, but the consumer was never the first. Now, everybody talks about consumer as the first. That is second. The another important thing, which now another factor which is coming with the recent changes, which is happening, is the how do I give an unified customer experience when the customer makes a payment? Making payments online, whether customer making payment offline, whether the customer is making payment using mobile, whether the customer making payment using IVR. That is something which is actually now changing. Be it online, be it offline, be it in-store, be it doorstep, is something which are very, very important initiatives, the ecosystem has adopted. That is one. Another important thing is we are talking about, how do we get customer doing transaction multiple times or a regular interval? That is another initiative what everybody has started doing in the ecosystem, which is very important. And that's where you are seeing a lot of growth into the digital transaction. Now, coming back to I spoke about big tech companies entering into the market. Now, global companies started seeing India as the country where you'll see a lot of digital transactions. I'll give one of the examples where, the global messaging application coming to India and getting into payments. Another US-based company, which is a multinational technology company, getting into payments and fueling the entire growth into the UPI, which is one of the biggest success in the world, right? So this is something which will keep growing in India. And I think the world will learn from India. That's what we feel. So you actually touched upon the margins going down, right? Now, an ecosystem, and the way we said, everything has to be taken in a positive way. And hence now ecosystem has actually started thinking about, if my margins are going down, how do I get more number of transactions? How do I get more number of people doing digital transactions? As well, how do I get to earn money with a different way, not only by doing payment processing? And if you see recent times, you will see a lot of other new initiatives coming into picture, such as neobank, overlay services, new partnerships, new acquisitions. Those are all coming into the picture. So if you see, I am not sure whether, if you say 5 years back, somebody like the big corporate working with fintech, something which would be like, a very, very rare case. But now big fintechs, the big banks, they are actually collaborating with fintech, coming with the solutions, trying to do something unique for the customers, and actually opening up a lot of market for the digital transaction. That is something which we are seeing as a fintech coming up very well. The another point which I would like to make is the regulation, right? The government of India, the Reserve Bank of India, and NPCI are the one who are actually putting regulations in place to ensure that the customer is protected, number one. Number two, because this industry is going very, very big, it's actually growing very fast. So it is important for the RBI and the government to ensure that nothing is wrong in this industry. But with this, there are a lot of opportunities getting open, right? Now, I think Sunit spoke about the regulators, their opportunities coming, right? The group has just done launch of around 5 tokenization for the customers. So this itself becomes a big opportunity for fintechs like us to come into the market and provide this as a solution. Probably 2 years back, nobody thought of it. That people thought that tokenization will probably 5 years down the line initiative for India, but now it's a thing for India, and there are a lot of innovations which will come around tokenization. And being the fintechs in India, we are actually gung-ho about this particular system, and we have solutions around it. So what I'm trying to say is that the changes are coming. Ecosystem is taking those changes as a positive, and we are actually working around it to increase our revenues, to basically focus on innovations, and then focus on the consumer experiences. That is something which will go. And I personally feel that 2022, 2023 is going to be the best year for India as the payment industry.
Sure, thanks, Rajesh. I mean, you're correct in terms of, I think we have insane number of digital transactions, largest in the world. I've seen graphs where India trumps even China, especially in faster payments. Yes, you made a point about other countries learning from us, and I, as a consultant, do work in a lot of countries and a lot of regions, and they all want to know about India. So I mean that is something I really see, and it kind of makes me proud.
We should be proud of India as an ecosystem, and we should be proud that we are part of this industry.
Sure, thanks for that, Saurabh. Sorry, Rajesh. Yeah. Saurabh, now coming over to you, and I mean you have played a different role, cash management again on the bank side. So just wanted to hear your views in terms of how all these forces are changing your model when it comes to payments and managing various payments, whether it's customer or corporates.
Sure, of course. Thanks, Zubin, and good evening to everybody. I think it's just been wonderful listening to a lot of thoughts, and I find that most of the things that I had, I think it's a common experience across for everybody. So a lot of points have got covered here. But I think, when I look at India as a market, it's such an exciting market. And I think, a combination of a number of factors which have really changed this whole landscape. It's just been a perfect storm in terms of timing of a lot of things which are happening right now. Both driven from the regulator side through the payment rails and regulations which have been extremely disruptive, remove the fees completely. So, just takes me back to sometimes when I think about it, the telecom industry and how suddenly the whole business model itself changed from voice to data, right? So it's just been extremely disruptive regulations. I think relentless pushing of the digital agenda by the government as well. I think coupled with it, the whole development around APIs. I think that's been extremely important, because what the two put together have done is it has opened up a lot of opportunities which the bank earlier could not really target. So, from a from a corporate perspective, if I look at it, transaction banking a number of years back, we could help companies automate their payments, accelerate their receivables, and so on. But we could never get into areas, or we struggled to get into areas with regard to invoicing, helping them present these invoices, accelerate through payment links, request to pay. So really enable faster collection of their receivables, uh, cash application through artificial intelligence, machine learning. We're now able to automate and get into a number of different areas and add value to the whole corporate supply chain more holistically end to end. So that's been a huge area of opportunity, or new opportunities that have really opened up. I think from a bank standpoint, there has been also, with a number of players coming in, and obviously the demand by the consumer or the customers. So there's been enormous amount of change with regard to the focus on customer experience. So therefore, huge investments into UI, UX, analytics, and dashboards, etc. So banks are really forced to really review their processes, simplify them, and enhance the overall experience to the end consumer. So that's been a big change as well. I think the third aspect is with regard to the monetization of data, which didn't really exist before. So it's really opened up lots of opportunities for more personalized, more relevant, better products, better solutions for the customers. And I think, finally, one last thing which I would really add here is that the APIs have really enabled partnerships between banks and the players in the ecosystem, which weren't as easy earlier. And it has led to quick adoptions of innovations, and therefore bringing lots of win-win kind of situations to our customers and the industry. So those are a few thoughts from my side.
Sure, thanks. Very relevant ones. And I like your example and analogy of voice to data in telecom, and I think in payments also data will soon become the new oil when it comes to monetization, and it's being used for various use cases, and we'll talk about some of that going forward. So now moving to the next question, and I know we barely have around 10-15 more minutes, but I think let's try to make it a little quick and rapid fire in terms of our answers. I think let's ask the question. Initially, when this MDR announcement came, I think the industry was quite disrupted, taken by surprise. It was like, what has happened to our revenue model? It's no more money of transactions, and there was a lot of I would say unhappy noises. Now I think it's been almost closing around a couple of years, almost 2 years down the line. Do you believe all those concerns that were raised then are still valid? I mean, there was a talk about we'll lose revenue and therefore will not invest and innovate. We'll not we'll have issues because I mean, if we're not going to make money off a transaction, how do we run our systems? There were a lot of these issues being cited and conversations had. And there used to be a lot of hope of it reversing or changing. Some people still do hope it will reverse and change. And my question is, do you think people have learned to live with it and modified and updated and changed the way with the new norm? Or do you think there are still major issues that has created and will need to be addressed going forward? And for that, maybe I'll first ask Sunit to come in from a bank perspective view, and Neha, I mean, from your side also, from I think as part of Amazon, you enable payments at the same time. You all also kind of do a lot of accept payments.
Sure, Zubin. So let me try to again keep it rapid fire. We try to keep time for everyone. So just quick two thoughts on this, right? There will be always certain doors getting closed, but at the same time, it opens many more doors, right? So you really do not want to be driven by a point that my margins are shrinking on one side. I cannot just be kept in on that point that impacts every player in the same way. It's very uniform impact, and even globally we're seeing it's happening across, right? The MDA margins are always going to be shrinked ever and ever. So what I'm supposed to do is find new models, new areas where I can really squeeze out and make money. So that's where I need to start thinking beyond MDRs, what I can do as a solutioning to my customers, which should increase my revenue share from across the products and not necessarily left to payments, right? So I think we touched upon in between, right? We can offer many things to the customers. I can always use my payment and lending experience together as a bank. People who are using my payment services, can I join them in their lending requirements or any experience where they need any help on that? Look at the entire BNPL product, which is a buy now, pay later product, which has got emerged across. It's part of the merchant ecosystem where the entire product got created, and it's significant. I mean, it's a windfall of revenue coming for various banks who are playing across and doing a lot of good work on that side. But to keeping it short, there are many good revenue models emerging, which is more than compensating the MDR loss, probably you can say in that terms. To my mind, you just live with it and keep on moving with that. But it's not very specific to you; it's across the industry. And to my mind, that there will be always a situation where there'll be some revenues will start going down, but you have to find some new revenues to bring up and make most out of it. That's the way I'll sum it up.
Thanks, Sunit, for that. Neha, over to you.
Yeah, thanks, Zubin. So I think +1 to I think what Sunit said. So of course, I think if your question was the concerns are still valid, I would say the concerns are still valid. Specifically, if you're talking about a payment or company, of course, the lens, if you use it from say a merchant's perspective, it's a big win. And I think you've heard Grofers. I think it's the same perspective as Amazon. In fact, actually, I think like the way we are able to kind of really get tier 2, tier 3 customers now to migrate to digital payments, because there is zero MDR and therefore there is incentive for a merchant to actually go and drive digital adoption because of the long-term value that the merchant sees. So of course, I feel that there's positives, and I think across the board, payment players are kind of innovating. But I think the only uber point that I just wanted to kind of make is that there is a huge cost of acquisition of bringing customers on board to digital payments. So of course, I think as a country, we've done a great job in getting maybe the top 7,500 million customers, but the journey is really long. The journey is to get the next 200 million, 300 million, 700 million people come on digital payments, and it will need innovation. It will need a lot of investment, and investments do not happen when things are governed and regulated and zero MDR. I think innovations happen when market forces play. So I think like, while I think as an industry we are very optimistic, we are very gung-ho, and we'll find ways. I think Sunit has talked about buy now, pay later. I think as Amazon, we are of course finding advertising, buy now, pay later, financial services, and modes of revenue in all of those other places. But I think the core, I believe sustainability means that everything has to be sustainable at some point in time, because then the economics really work out. And specifically when we want to get 1 billion Indians to pay digitally. So I think like where I differ is really on that point. There is a huge cost of acquisition and retention that we need to, as an industry, go after. So I think like while there is huge optimism, but I think it needs to be balanced out at some level is the point that I really want to leave with the panel.
So thanks for that, Neha. So yes, I mean, we also hear as consultants from a lot of people that there is this concern on, while there are alternative models being working out and they are enough to sustain, but yes, that, that per transaction core revenue stream, which is now no more. And as you said, even though we have a huge transaction volume, we barely have, I think, 200 or between 200 to 300 unique users, 200 to 300 million unique users as compared to 1 billion plus to be added. And I think, yes, I think the government's betting that if it's easy and free to use, then obviously everybody will hop on to the bandwagon. And I think that's the direction they've taken. And I get your views that, it's not that it's just making it free. It's also, education, incentivization, all of those things that I think we've seen happen earlier, which I think is now difficult to do with the current economic models. Thanks, Neha, for that. So I think moving on to the next question is, and I think we did cover a lot of this, is, so what does this mean? And what are the new models evolving? We heard already some solutions around, buy now, pay later, lending, further integration with APIs. But beyond that, if there are any other inputs, quickly, Malik and then Saurabh, if there are any other emerging business models or any other ways in which, payments can become more rewarding for, for providers or suppliers or stakeholders. Please do share your inputs. Malik, I'll go with you first. We'll try to keep it short and then Saurabh.
Sorry. I mean, just to summarize on top of what has already been said, there's things like membership fees. You can create premium products that are like one level up with more services. So membership fees are driving a lot of these lower grade products out on the market. Don't underestimate the BNPL installment loans on the fly transactions. That's key. And then there's also insurance services that you can bundle in. So some banks have called them packs, where if you buy this pack, you get travel insurance and blah, blah, blah. You get this pack, you get roadside assistance and things to help you if you break down. You can start as a bank leveraging your size, or a financial institution leveraging your size and delivering services to compensate for the revenues you're losing out on the MDR.
So thanks for that, Malik. Saurabh, I'll bring you in here. Any views from your side?
Sure. So I think just a couple of things I wanted to add to it, which is that we need to as banks we also have access to a gold mine, right? Which is the low cost demand deposits, which essentially are coming from payments, and therefore we do need to assign value to those deposits. At the time of really figuring out what is really the value of payments, that is, what value is it creating. So that's one area which we should really look at. I think there are other, most of the things are covered, but some of the other areas which the banks could really look at, or payment companies, which is with regard to the FX, which often is looked at separately from the payments revenue, but it's really part and parcel of the payment. So that's another area which one could really look at. But I think overall, one area for enhancing monetization and creating a proper value that the payments is creating is to build a good loyalty program, which can help in terms of determining the actual value which has been created by various different pieces, putting it all together, and that's real. And then working out ways in which you could really share it with various partners in your ecosystem, that's really that could really help us really move forward.
Sure, thanks for Saurabh. Thanks, Saurabh, for that. Yeah, I think being a bank is, you have other sources and you can cross leverage and cross subsidize, and I think that makes it more easy because there are a lot more products you can give off from or payments, and I think I see that happening a lot by banks and how they're leveraging data to either cross sell, upsell, more leads, better experience, things like that, to make it a lot more sticky, and not just really making money off the payments, but facilitating payments as these levers to be able to manage and keep customers in. Thanks for that. So moving on to my next question, I think given that we're almost, I think we just have about 10 minutes in, I'll kind of go to my last question, and I think I'll give everyone a few minutes to speak on it. Is basically, the models are changing, margin pressures are there. Yes, there are all these new ways in which monies can be made. A lot of banks, non-banks, a lot of players are coming into the market. There are investments that companies need to make to evolve, to innovate, to create new products, to find out new ways of making money. It also is a heavy load on the technology, and we've seen certain systems go down and recently, given their volumes were huge and they were not capacitated or not provisioned for. So all of these things happen, and sometimes people say that because there's no money, that maintenance is not there and all of that. So given all of this that we've seen, and given all that we've heard from everyone, and I'll give an input, I'll give everybody a couple of minutes to speak on, is what would be that one piece of advice that you would give a new player that would say enter the payments arena in India, in terms of a model, in terms of revenues, in terms of an area better to focus on, in terms of which is the right place, and how should he structure his or her model to kind of be successful, given all that we know right now in the payments arena and what the future might hold. For that, maybe let me start first. Ladies first. Neha, I'll start with you, and then we'll do a round robin.
Sure. I think very quickly, I think not taking too much time, Zubin, I think my advice would be find a unique customer proposition that can be scaled to millions of people, because payments make sense when you're talking billions of dollars and processing that kind of volumes and all of that. So find a unique opportunity that you are able to scale, and adjacent business model which can make it cost effective. Like, say, for example, in Amazon case, having a marketplace behind makes it a lot more, the value proposition a lot more, because you don't need to make money only from the payments business. If you can really solve for the customer and make the customer more engaged to do commerce transactions, it makes a lot more sense for Amazon to kind of incubate payments in that sense. So I think that would be my advice: unique value proposition, scalable, and find your adjacency really well.
Sure, thanks for that, Neha. Malek, you want to go next?
Okay, I think from my side, I would say to people, check your mindset across your organization. There's a revolution, I think, that needs to happen in people's minds that transcends from the I own my customers and the data to the integrated world that is going to be inevitably there. So definitely do that. And I would say as well, other than understanding the technology that you're going to use, which you're going to have to do, focus on upskilling from the angle of being a solution architect, for lack of a better word. People need to build services that might span a dozen entities in the ecosystem by linking them together to create a unique proposition to get it out there. And you can't do it with a lot of lead times anymore. You've got to be quick. And just remember that you can't do it all. There's nobody that can do everything. You've got to work with people and fintechs and partners and services to create that proposition for those customers. So that's what I would say, go for that.
Oh, thanks, Malek, for that. Saurabh, you want to go next?
Sure. Yeah, I think just to add on to what Neha was saying, I think it's important to really identify the target market carefully, build a proper business case. There are plenty of use cases, plenty of untapped opportunities. So there's right now room for everybody, but at the same time, it's also a highly competitive space. So build the business case carefully, choose the right partners, be ready for adoptions in this very rapidly changing landscape.
So thanks, Saurabh. Lohit, coming to you next.
I would say there's scope for creating more co-branded or co-opted payment options. If you look at a merchant like us, I know exactly where the customer lives, right? I'm delivering products to your doorstep. I know what kind of a family size does he have. I know what kind of coffee beans do you order, right? So with that level of rich data that we are sitting on, and to ensure that we have our skin in the game, I think there's definitely scope for creating more co-branded payment options. Specifically, a co-branded BNPL would be our first priority.
Sure, thanks, Lohit. Yeah, I mean, you all have access to a lot of customer data, and if that can be integrated into a payment solution, I think it's a win-win for both. Rajesh, over to you next.
Yeah, thanks, Zubin. So first of all, I would say that there is a say in the industry now that payments is a commodity. I think as a new fintech, that is something that has to come out of our mind and say that no, payment cannot be a commodity. Payment is a specialized thing, and it is the heart of entire economy of the country. Each and everything which is happening in the country, which is done to do with money, the payments is the heart. So anything and everything to do with the economy, payments is there. How? As far as the new fintech is concerned, we have to ensure that we look at the 85% of the economy which is still cash. How do I actually get there, create new use cases, create specific solutions around it, and then target that, and don't say that I will be having a 100% pie of that particular market. You may start it, but create a market for others to come and flourish that. That is something, the thought process, I would leave it to the new guys coming in. That is one. Another thing, let's not discourage or let's not get think negative about, margins are shrinking and the government is making everything free. I know that's not easy. It's not easy for us to run a business without money, but I think there are various avenues which can be really look at, and then actually we can make money there. So I would say go all out, look at 85% market which is still open, create new use cases, go after that, create solutions, and help other fintechs to actually come and take some pie out of that. That is what I would say.
Thanks, Rajesh. Last but not the least, Sunit.
Sure, Zubin. So see, luckily, as we evolve, right, we are in that phase where making losses for a decade is not a problem for a company who are coming with a good business model. So there's dearth of money available for every new incumbent, every new startup who comes with a solid idea. So that's the problem which is not solved for a few years ago. So liquid is easily available. Only thing you should focus upon, get a right idea, which you think would cut the chest and get you into the market. And the second piece you should be getting into is be always nimble, because you shouldn't build a business model which is so much one-sided or a one pony story, where suddenly one regulation, one competitor movement can disrupt your model, then you're in trouble. So as long as you're able to build a kind of a unique proposition and you're nimble to make sure you're able to align or change yourself with the moving tailwind, you are really getting a good space. The money is not a problem for you to scale up ever.
Sure. Thanks. Thanks, Sunit. So I think it was an interesting, very, very interesting discussion. And I think the takeaways were pretty, the advice that was given, I think, were very interesting. One, of course, is I would say, find that right idea and right proposition. If in the interim there's money to be got, it's available. I think don't just look at payments as a standalone. I would say adjacencies, what else can you do with that? What can you do with on top of the data is important. I think another good advice that I hear was that don't be protective about your customer, your data. This is the world of being connected. Think of solutions where you are bringing in other players, other participants, leveraging bits and pieces or points of data from either the merchant or another fintech or elsewhere, and integrate a lot of services together to kind of develop a proposition that doesn't exist. I think that's an area or a hotspot to kind of look at. Lohit did mention about co-branding, so I think that is again on the partnership side of things. So integrate and kind of work everywhere. And I think, as you said, payments, while people do say it's a commodity, your point being it's really not. It's specialized. I absolutely agree. It's just that people, okay, the part of just moving money from point A to point B has become a commodity, but I think it's all that stuff that you can do because you moved that, why it was moved, when it was moved, and how you can kind of leverage all of that information, that data, to be able to generate insight, either give it back to the customer so that he can make a decision on it, or use it to be able to cross-sell, upsell, or offer a better service or a different service that is really genuine and needed for the customer. So I mean, these were some of very interesting takeaways from all of you, and this came directly from all of you all, and thank you very much for all your time. Really enjoyed the discussion, and back to you, Kavya.
Thank you. Thank you very much, Zubin, for beautifully moderating that session. And thank you indeed to all our panelists joining us this evening and making it such a very impactful discussion with all the insights that you've shared. Thank you once again for joining us at the conference. Thank you once again.
Thank you.
And with that, ladies and gentlemen, and all attendees, we do come to the end of the conference, but we do hope you've managed to have an enriching time listening to our speakers and also networking during the breaks with all the attendees. We'd like to thank all our eminent speakers, all our partners, TSYS, PayPhi, Amazon Pay, and PwC. And with that, we will now begin with the Payments Industry Awards in a while, and we do look forward to your presence in applauding the achievements of all those whose efforts deserve recognition. We're going to get started with the Payments Industry Awards in just a couple of minutes, so don't go anywhere. Stay with us, and it's time for a gala evening with the Payments Industry Awards.
Financial institutions